Good morning, everybody. Welcome to the September 26th issue of the Tucson Mortgage Weekly. I'm Todd Abelson. Thank you for tuning in. Okay, let's cut right to the chase. Last week, wild and woolly week, if you watch what's going on. The big announcement midweek was the Fed's new Operation Twist. And the twist portion is that the Feds were going to play an integral part in lowering long-term rates. Now, in a couple of second analysis, let me just reiterate for those that may not be 100% aware of how it works, is that the Feds really only are in a position to affect the shortest of short-term rates, which is how much they loan to the big banks to borrow money overnight. That's literally what the Feds control. However, what they've done with this quantitative easing is that there's a whole bunch of funding money that they have available, and they used to, as of a couple of years ago, they were buying all kinds of securities, bonds, more treasuries and whatnot, and that was QE1, QE2, quantitative easing. And so what's going on now is the Operation Twist is that as these bonds are maturing, as investors are paying them back and buying them in effect, the Feds now have this principal back. So what do? Well, what they should be doing is putting it back into the treasury so that they reduce the deficit. However, what they're doing, which is what's helpful, is they're using that money to buy long-term bonds, so mortgage-backed securities, other treasuries and whatnot. And so while that's, maybe making short-term rates go up a bit, it's really bringing long-term rates down. And where we've really benefited in the mortgage industry is that, like TARP funds, they're buying those mortgage-backed securities, which brought rates down. Now, what happened is the knee-jerk reaction was that the price of mortgage-backed securities over most of it Wednesday, and then the rest of it on Thursday, was that we had over 150 basis point improvement actually 150 basis point reduction in the price of bonds, and that was an improvement in the rates by probably around 0.3%. But then on Friday, it turned around and gave back 90 of those 150 basis points. So while we still have the equivalent of a 60 basis point improvement, I think the pop on that day is long since gone. And so we'll see by the rest of this report what may be going on in the market. Anyway, so the sentiment changed, and that's continuing this morning. Now, what's happening right now is that on a news front, the new home sales came out as expected. It's a little bit weaker, but not a big deal. And mostly out of Europe, what's going on is there's a little bit of optimism, or the way I like to put it is maybe a little less pessimism that what's going on in Europe, specifically Greece right now. And what's going on is that the European Central Bank is announcing that they may do a quantitative easing-like program and buying Greek bonds, which would help actually bail the Greek government out, much like the U.S. government bailed out the economy here. I don't know if that's good or bad, but that certainly is at least stemming the flow of blood at the moment. What's going on this week, there are a lot of reports coming out. Tuesday, the consumer confidence and consumer sentiment reports come out. On Thursday, GDP and the jobless claims. And then on Friday, a really important one, the core personal consumption expenditure, which is a report that actually judges, the Feds love that the best because that kind of judges what's really going on in the way of inflation. Now, with the Jewish holidays coming the end of this week, actually it begins on Wednesday night, so it's on Thursday and Friday. Rosh Hashanah, which is the beginning of the Jewish New Year, there's going to be some thinner trading. And what's going on in this volatility is it may not be good. We may have a lot of selling pressure going on into that short week or lighter trading week. But the bottom line is there's a ton going on. What I would suggest is do not be lulled into a sense of complacency by what's going on in the market. It's incredibly volatile, and as you could see from last week, we can get a 0.3% improvement in rates one day and a 0.25% worsening the next. So take what you've got on the table, lock it, hug your kids, and if you're celebrating the holidays, I wish you and your family a very sweet and a happy new year, and make it a great week. Don't forget to check out the blog site, TucsonMortgageBlog.com. Again, I'm Todd Abelson. Make it a great week. Bye-bye.